Good morning, everyone. This is the Vermont House Committee on Commerce and Economic Development. It is Tuesday, February 18th, 2025 at 9:03 in the morning. So we're beginning our day this week to look at some possible amendments to H-137, which is an act relating to the regulation of insurance products and services. So first off, we have our legislative counsel with us, Jen Kirby. Good morning, Jen. Thank you for joining us.
Sure. Jen Kirby from the Office of Legislative Counsel. Do you want me to put language up on the screen?
Yes,
Is that
could please.
okay? That's
We have that one posted.
cool.
And it
Can
is
I
posted
get
as well.
sharing access increase? Great. Okay. You can see that. Looking on it anyway. Yes, okay, great. Whoops. All right. So this is some potential language for addition to H-137. This is language regarding Medicare supplemental insurance policies, Medicare supplement insurance policies. And these are what sometimes referred to as Medigap. This is what people can buy when they're on Medicare, and it helps with some of the out-of-pocket expenses on those plans. So this would be amending an existing statute in Title 8, 8 VSA 4062B. And one of the things I noticed, and I can see I've already done it up here as well, is we are very inconsistent about the use of the phrase Medicare supplement or Medicare supplemental, but the term does seem to be supplement. So I've made some of those adjustments as well. This would do a few things. Under current law, within 5 days after receiving a request, it says of, but we're clarifying with after, receiving a request for approval of a composite average rate increase. So where the rate would go up more than 3% under existing law, this would change that to more than 10% for a Medicare supplement plan, or any other coverage changes that the commissioner determines would have a comparable impact for a Medicare supplement insurance policy issued in Vermont by any of these types of insurance companies, and that has 5,000 or more total lives in the Vermont Medicare supplement insurance market. The commissioner would notify, and this is existing law, notify the Department of Disabilities, Aging and Independent Living, and then this proposed language would add, and the Office of the Healthcare Advocate, of the proposed premium increase. And then there's a requirement in existing law that the Department of Disabilities, Aging and Independent Living, which we refer to as DAIL often, must inform the members of the DAIL Advisory Board of the proposed increase. And then there's some requirements around the commissioner not approving Medicare supplement premium increases unless it meets certain statutory standards for approval under health insurance and the various insurer type requirements. So to get to the rest of the changes here, and at the end we'll get to the change that is the reason that this language is before you in the first place, is that it's taking out requirement under existing law that there be an independent analysis performed by somebody pursuant to some language in Title 33 around DAIL, the Department of Disabilities, Aging and Independent Living. And so it's taking out that language in subdivision 3 and taking out the reference to it in subdivision 2. And so under the existing law, if there's major differences in the recommended rate increase, then there's this independent actuarial analysis done as well. And my understanding is that in practice, at the Department of Financial Regulation, those recommended actuarial rates almost never differ because they're based on actuarial science. And so the department is suggesting getting rid of that requirement as well. So this would instead say that for any filing in which that requested composite average rate increase exceeds 10% and impacts 5,000 or more covered lives in Vermont, the commissioner would need to solicit public comment and changes a must to a may, hold a public hearing in accordance, this would say in accordance with the department's applicable rules regarding administrative procedures. And under existing law, in the commissioner's discretion, the hearing may be conducted through interactive television, which is a little outdated for our purposes. So we changed this to our more current language of a designated electronic meeting platform. And it would, again, get rid of this sort of parallel process when there are, in certain instances, with an intervener, et cetera. And then where we get to the change that is the reason this is before you in the first place, or what prompted this, is the timing issue. And so this would say that for a Medicare supplement insurance policy with an effective date of January 1st, which I understand is when most of them take effect, the insurer must file its premium rate request pursuant to this section not later than July 1st of the preceding year. And if it's a policy with an effective date other than January 1st, then it just must be 6 months, which is the same thing, but we're being a little bit more specific about it for those with January 1st. So not later than 6 months prior to the effective date of the policy. And then it would repeal that language in Title 33 around the independent analysis of certain rate increases or rate requests. And the department will be better situated to explain to you why they're recommending the change around getting rid of that separate independent expert process. But that is what the language would do.
Let me just ask, does the health advocate have the ability to hire their experts if they see the need for it?
I mean, I believe they can. In this case, they're just getting notification, so they're not as involved in the process as they are under regular major medical health insurance rate review. So there's not a specific role set out for them in here. But they do have the ability, to the extent of their funding, to hire an expert or an actuary if they need it.
Okay, thank you.
Has the healthcare committee looked at
No.
this? Okay, so this is here first and then they'll take
Right,
it. Okay. Oh, well, I guess my other question is, at the very last part, is it necessary for us to have the section about the policy with an effective date of January 1, or can't we just say everyone is required to file 6 months before? Like, are we overcomplicating?
No, I mean, I no, I don't think we are. I think it's helpful for especially insurers who may not do as much business with the department to know July 1st if they have a January 1st date, right? For others, they would probably have to get the specific date of what 6 months is from the department.
The question? Now, and maybe this would be more for Emily, but how does this make sure that the department okays the filing prior to Medicare when open enrollment starts?
I will let Emily speak to you on it.
Okay. I'll wait till we have Emily. Other questions? Great, Jen, thank you very much.
Sure, and I will stay.
Sarah?
Morning.
Morning.
I'm Sarah Teachout. I'm the Director of Government and Media Relations for Blue Cross and Blue Shield of Vermont. This is my first time in this committee. If you don't mind, could I just give a 2-minute about Blue Cross? Okay. For those of you who aren't aware, we're one of 34 Blue plans across the country. We're a single state, nonprofit, Vermont-only insurance company. And our headquarters are in Berlin, up by the airport. We have about 400 employees up there. And I can answer other questions if you want, but I just wanted to say that as I started out. We support the changes that are being proposed here. I think what happens right now is our actuaries file sometime May, June, occasionally July, but I think that all of the other insurers are not filing on the same timeline. So sometimes all of the rates aren't ready when people are ready to buy their plan. And so sometimes people are put in the insurance that they either have to renew or purchase a plan without actually knowing what next year's rates are, which isn't optimal, as we know, for consumers. A few other things that are happening, the 3% increase is pretty low. So that pretty much triggers this entire review process for every single filing we have, which is also, and Emily will talk about it, slowing up the process and making it harder to get everything done on time. So that's part of what's happening. And then, so Blue Cross sells med supp plans. We also sell every other kind of health insurance here in Vermont. So we have filings before the Department of Financial Regulation. We also have filings before the Green Mountain Care Board. In every instance, the regulatory entity is using a separate actuary to review our actuary's work before they approve it. So there's a pretty rigorous process in place for actuarial review of our rates to justify whether or not they meet all the standards. So we support what you're doing. We appreciate the simplification. And I think I don't see the healthcare advocate here, but in effect, I think that the department's been notifying him anyway of our filings so that he can be aware of it. So this just makes it a little bit more formal, the notification. Happy to.
I think, maybe Blue Cross may be notifying, but maybe others aren't, we don't know, but I think overall with all the other insurance companies that are providing Medigap policies, that it's a good idea for them to notify them as well.
So anyway, we support these changes.
Sarah, thank you.
Yeah, thank you.
Emily.
Good morning.
Morning.
Hi, thanks for having me. Sorry I couldn't be there in person. So the department does support these changes. And if I could just start by giving a little background of how the process is working right now and what this bill would do to hopefully improve it. I think that might be helpful for the conversation.
Sure.
So right now, as Sarah mentioned, in our statute and what Jen went through is that we have a 3% threshold to do this extra, additional review for filings which impact over 5,000 policyholders. And so what that has resulted in is two actuaries reviewing the same filing and normally coming out with a rate that is essentially the same. This leads to not only a lot of extra time, but also a lot of extra cost. I think I asked one of our directors to pull the amount of money that we're spending on these reviews, and I believe it was between $10,000 and $20,000. That's then passed on to the insurance company, who then passes it on to the policyholders. So in practice, it was leading to a lot of extra time for review, several months, and then the outcome largely was unimpacted by the extra review. We do notify Dale as we're required to do in the statute, and then we've also kept the healthcare advocate in the loop because they do have a lot of people who they serve who might see a rate increase and wonder why they're receiving it. So we just try to give them notification of any rate increases that we see coming so that they can be prepared to answer any constituent questions as they come in. So not only has the review required extra time, but also what has happened is there's been inconsistency in when companies file. So Blue Cross does file in June every year, but that's taken us from June to October to approve the rate. That's how long this process has taken us. And then we also have several other companies who file. I think there's maybe about 10 med supp companies in the market. So what happens is that we receive Blue Cross's filing and then are required to then review all of these other filings, even though they might not be hitting that 3% and 5,000 policyholder threshold, it still requires us to do an actuarial review to make sure the rates are justified, they're not excessive, and that the company's supporting it with accurate data. So what happens is the inconsistency of the filing date can lead to a backlog, as well as this process that's in place currently that requires the extra actuary to review the filing. So the suggestion in this language is to remove that extra actuarial review, still have our actuary review it, and review the insurer's work to make sure that it's supported and documented. But it will take away the requirement to hire an extra actuary to do the same review that 2 other actuaries have already done. So you essentially right now have 3 different firms looking at it. Whereas we really do have confidence in the actuary that we hire to do this analysis. And then also adds a statutory requirement to inform the healthcare advocate, which we think is important. So we suggested that be added in. And then the other piece that is different as well is right now, there's a required public hearing if the difference between the 2 actuarial results is, I believe, more than 2%, we're required to have a public hearing. What this would do is require us to take public comment, but leave it at the commissioner's discretion to have a public hearing. And the reason why we felt that was appropriate was because when you have a required public hearing in statute, it's considered a contested case. And there are a lot of other process requirements that come along with that. So by removing that requirement, it allows it to not be a contested case, and it just is a simpler process. And like I said, we're trying to simplify this and make it less complicated. But again, we don't want to take away anyone's right to notification or access to public information. It's more about simplifying the process and making sure that we can get these approved in a timely manner. So I'm happy to take any questions. I think I've covered most of the aspects of the bill and the changes.
Questions from anyone?
I don't know, have the health advocate and the Green Mountain Care Board reviewed this?
So the Green Mountain Care Board have not. They're not involved in Medicare supplement, nor do they have any statutory authority over a Medicare supplement. That's completely with the Department of Financial Regulation right now. Okay. We did run this by the healthcare advocate. I don't know if they're in the room to testify. I think they do have some additional thoughts, and I think that the committee should hear those. But we have talked to the healthcare advocate. We've also talked to several other Medicare supplement insurers in the market to make sure that the filing deadline requirement wouldn't, cause a problem with their filings or their ability to file on time. And largely, they said that there was no issue with the suggested deadline. I'm trying to think of any other stakeholders. I think that's about it at this point. As far as the conversation, yeah. Could I add one other piece to this conversation, which I think is important? So with Medicare supplement, all the plan designs are set at the federal level. So the department has no flexibility to change or modify any of the plans that are being offered. There's also what are called loss ratio requirements, which means that an insurance company has to meet a certain loss ratio, meaning for every dollar they spend, a certain amount. I think it's in the Medicare supplement market, it might be 85%. I can look that up to make sure I'm saying the right number, but they have to pay a certain percent of every dollar they receive towards claims, and the rest can go towards administrative expenses. There's also consumer protections in there to require if an insurance company goes over that loss ratio, they actually have to give money back to the consumers. So there's a lot of built-in protections already to not only at the federal level, but then in our statute that Jen walked through. If a company is if they have a variation from past loss ratio filings, so let's say they were targeting a 90% loss ratio, and then all of a sudden they're trying to get to 70% or whatever amount, there's protections in our statute right now that wouldn't allow that. So I guess I just want to emphasize that this market is very protected because it's serving a vulnerable population in a lot of ways, people who are on fixed incomes. And so I do feel like there are sufficient protections in statutes that if you did make these changes, the outcome of the rate is not going to be modified in any way where you'd create harm to anyone buying these products. It would just hopefully make the process more efficient.
Any questions for Emily?
Emily, can you talk about changing the threshold from 3% to 10%?
Yes. Yeah. So as you all know, inflation has been well above 3% in many of the past years. And then medical inflation has been, in a lot of instances, especially in Vermont, a lot higher than that. So what we were seeing is that filings that came in at 5 to 10%, which, you know, if you compare that with several other health insurance filings that we're seeing in Vermont, namely the qualified health plans, which I think some of them were around 20%. The 3% was just feeling largely out of line with a realistic benchmark for when a rate should trigger this extra review. So starting with that, then what we did is we went around and said, okay, are we an outlier here? Are there other states that have the 3%? There's no other state that has this extra review process in place. The only other state we found that had a similar structure was Massachusetts, and they had the 10% threshold with also a discretionary hearing that could be called by the commissioner. So using that information, we felt like that was a good benchmark based on not only what we were seeing for filings, but then also in line with, you know, regionally another state that has this. And we talked to Massachusetts, and we felt like that was a good place to set it without it getting too high that it's not going to be triggered, you know, because inflation can move around. So felt like that was a good benchmark of where to put the rate trigger without it being too low that every single time you're getting a filing, it's triggering it.
Great, thank you.
So these changes that are being proposed can save money for the department, save money for the insurers as well,
Correct. Yeah,
without putting policyholders in jeopardy.
correct. That's my opinion.
Okay, any other questions? Emily, thank you.
Thank you. Appreciate it.
Chris? Jen, thank you.
Yes, are you all?
Yes, we are. Now, I'll invite the healthcare advocate in, I think probably Friday. And have a chat with him. Good morning.
Good morning. How are you, Mr. Chairman?
Wonderful, and you?
Good. Good. For the record, Chris Delia, President, Vermont Bankers Association. I'm going to switch gears away from healthcare and talk about a concept that the chair was interested in, and one that I've explored a little bit, and I'll share it with you. So I want to take it back to an earlier presentation that I made when I mentioned fraud in Vermont and what we were seeing out there for fraud and how it's increased dramatically over the last 18 months or so. It's always difficult when you've got somebody who's come in who thinks that they've won the lottery or the grandson or grandchild is in trouble. They've got a problem with their computer. They go to that kiosk that I know you want in the bank, but and then they send their money and it's gone. And the critical piece for our industry is one of education to start that conversation with the individual to say, this just doesn't seem right. Let's talk about it. And those conversations sometimes work and sometimes they don't, because it is the person's money at the end of the day. They have every right to do the transaction, even though we believe that it is fraudulent. So there is an option that has passed in some states across the country. New Hampshire, right across the border, would be an example, where they give financial institutions the ability to place a transaction hold on an account for a period of time. I use the word transaction on purpose because we are not talking about a blanket hold on the account itself. Because individuals need to get access to their funds to buy food, buy gas, pay rent, whatever it may be. So the example, I'm 70, I go into the bank and well, let me step back. I'm 70, I've gotten something across email that says, this is going on, take X amount of dollars out, pay the taxes, and you'll get the windfall of $1 million. I go into the bank and I want to withdraw the $5,000. That's an unusual transaction for me. I don't deal with those amounts of money in my daily interaction with the bank. That starts a conversation with the teller. Well, what do you want to use the funds for? And you got to be careful. It's a delicate conversation that you're having. But eventually it's to try and tease out what's happening here. The way the transaction hold can work is after having that conversation, the decision being made that we're going to place this transaction on hold for a period of time. You could consider it a cooling off period. You could consider it an educational period, but it allows for further conversation to go on between the institution and the customer. If you have a customer that has identified trusted third party or a guardian or somebody with a power of attorney, this would, in theory, allow the institution to also communicate with that party to have that conversation with them. However, that communication would not occur if there's an inkling that the third party is the one that's the perpetrator. But using, again, myself as an example, if I identify one of my daughters as a trusted third party, the bank could contact my daughter and say, hey, your dad's here or was here, wants to take $5,000 out. That's an unusual transaction. Wanted to alert you to it. Then my daughter's going to scream and yell at me, wondering what's going on. So after this conversation with the chair, I went out and looked at what language exists in many states, and I communicated with colleagues at a national association and some institutions. And they provided me with language that I sent, a revised copy that I sent to the chair this morning. I think you've asked Anna Grace to post it, so it would be under my name.
Posted today.
If you want to pull it up, you're more than welcome to. I can go into as much detail as you'd like. But it is language that was worked on by a group of individuals nationally who came together, and we're seeing a lot of states putting language on their books. Each state slightly different. I have spoken with people who have worked under the New Hampshire statute and felt that changes could be made there. So what I've given you is a consensus, if you will, of folks outside Vermont who have worked on this issue and felt that this would be good language as a starting point for a conversation. I shared it with Aaron over at the Department of Financial Regulation. I also sent it to Joe Bergeron at your request. I've not heard back from Joe. And I shared it with my membership to get their sense of it. My membership is supportive of tools that we can use to help limit or prevent the fraud that we're seeing out there. That said, it is a significant tool to deploy. And what I mean by that is you're not going into it lightly as a financial institution. It needs to have those conversations and those understandings to draw the correct conclusion that, in fact, we believe fraud is occurring. So may instead of shall in a number of areas is important because it gives the institution the discretion to do it. It does not require us to do it one way or another. It is based solely on the circumstances that are presented to us in those conversations with the individuals. The first section, and maybe I'll just keep it at a high level, the first section deals with some legislative intent language to kind of set the tone of what is intended by this particular language that you might look at. The next section deals with definitions, whether it's an associated third party, an account. On page 2, you would have depository institution, designated state agency, eligible adult. And I'll pause there just to highlight that it's probably important to start somewhere. But please don't think that non-elderly or vulnerable adults aren't being taken advantage of. They are. There's many folks out there that fall for these scams. But again, in the spirit of starting somewhere, financial exploitation and then investment advisor. The original that I had sent the chairman had included a term called broker dealer. And come to find out that broker dealers already have language in statute that allow them to address these circumstances. I will defer to Aaron in his expertise within the department to address that. So I removed broker dealer from this version so that it was not something that you had to consider. Government disclosures, I put that in there because we have what I think is a successful and stronger relationship with the folks at Adult Protective Services than perhaps we've had in previous years. I've worked hard with them over the last couple of years to deal with frauds and scams and to work with their investigators getting specific contact information of bankers that they can call when they have an investigation that they're doing. But I did note government disclosures here as a may, not a shall. And then section 4 deals with the authority to delay or refuse or prevent certain activity. And it goes down the laundry list that you see here. And again, happy to go in whatever detail you want. But the notion is, again, I go in, it's an unusual transaction. Those conversations occur. A hold is placed on the account for a period of time. If we draw the conclusion that no, it's not fraud, the hold is immediately released. If we draw the conclusion that the hold is warranted, it will continue. If we get to the end of the period and it's still not clear, but an investigation is ongoing, you could extend it. Also, at the end of the day, it's their money. So if they say, hey, I want my money, they have every right to get access to it. And then there's other sections on page 4 that I reference because, as you can imagine, access to funds, funds availability, conducting transactions, they do have interaction with the Uniform Commercial Code, which I think you have a bill that you're going to look at 124 pages. It's a rather lengthy one. And some other federal regulations that we adhere to that we just wanted to note. We didn't want to come into conflict with them. And then the final 2 sections on page 5 deals with third-party notifications. Again, I mentioned you may have a trusted advisor or a third party that has been identified by the customer that you could contact. And then the final section is immunity provisions for the institutions or the investment advisors if they need to be included as well. So that's kind of a high level concept in theory. And I think the notion was talking with the chairman to kind of introduce this to you to see whether it's something that's of importance to you and whether you want to include it in the DFR housekeeping bill or save it for further conversations and perhaps look at it later down the road, either here in the House or in the Senate or next year.
So this law has been enacted in New Hampshire
Yes.
and they haven't had any problems with it.
I won't say they haven't any problems with it. The experience has been limited because there's less specificity in the New Hampshire law on how to address certain things. So there's more of a hesitation on some of the New Hampshire financial institutions to use it.
Have you heard anything about ones that have used it and the benefit of using it?
I have one situation where it's been used and it has not been in existence that long. So there's more experience that needs to occur, where they did have a successful conversation with the individual and the individual did realize after time that they were a victim of fraud and therefore the funds were not sent off to that perpetrator.
So that legislation saved one person
Well, one that I know of.
that you know of.
Yes.
Yeah, correct. I didn't mean it as in like only one person.
Yeah.
I meant it as
As an example.
As an example.
Yes. Yep.
Does New Hampshire also have the restrictions of the 65?
Yes. And the vulnerable adult, excuse me.
I appreciate the 65-year-old, cutoff, but what would be the disadvantage of just removing the age altogether? And because that allows you the freedom as a banker to.
Yep. Off the top of my head, I can't think of a disadvantage. It does open up the scope of the legislation to many more individuals. Here's the one I'm thinking of as an example. We had a young man in the southern part of the state, and if I told you this story, please stop me. Young man in the southern part of the state got involved with somebody online who portrayed themselves as a member of the military, and she was in service in the Middle East. And she was within a branch of government that she could not disclose what she was doing in the Middle East. And it got to the point where he was sending funds to her and also was interested in buying a piece of property and also adopting the fake kids that just didn't exist. He was 39. So it's just an example. I'd have to give it more thought. It just opens up the scope more to more people that you could potentially work with to not become victims.
Looking for a downside.
I can't think of one right now. Aaron may have one when he testifies, but I can't think of one right now. Typically, when we have these conversations, at least over the last few years that I've been involved, the conversations tend to focus on the elderly, vulnerable adults, people who just may not have all of their faculties about them and tend to be more victimized than others. But that's a policy point for you folks.
You use the expression, conversation, somebody comes
Yes.
in to do, does that extrapolate to electronic transfer requests and things like that? Are there things in place that would help catch those that might be unusual transactions
Yeah.
electronically?
Yes, it does. So if you're doing online banking and you see an unusual transaction occurring, if somebody comes in for a wire transfer that they want us to initiate, although often they take the funds out and they'll go down to, a Western Union and transfer the funds that way. We'd only discovered, for example, I think we've talked about the Microsoft scams I get the email from Microsoft that says there's something wrong with my computer. I might get the email that looks like it's from my bank, but it's not, it's a perpetrator. The victim could easily walk in with that, a copy of the email, or say, hey, I got an email and I'm trying to correct this situation. Sometimes they don't say that and just want to withdraw the funds. So usually it's the conversation because they're coming in and they're conducting that face-to-face transaction. Keep in mind that we have limits on ATM
Right.
withdrawals, so you're not going to the ATM and pulling out $5,000 or a large sum of money to do it. You could do it over time. This would also not prevent anybody from going to a supermarket or any place that they could get a gift card and, buy $50, $100 gift cards and use those to send off to somebody. There would be no way for us to stop that under this language.
Cool. Thank you.
Is there anything out there, like, there's nothing requiring someone to tell you why they're
No.
taking out money. So if I go to my bank and say, I would like $25,000, they say, why? I say, none of your business,
Correct.
nothing they can do.
Correct. We've also had situations where, and this happened down in again, the southern part of the state. We had a customer who was in her car in the parking lot for about 15 or 20 minutes on the phone before she went into the bank, was on the phone in the bank, left the bank, went back to her car, and then came back in on the phone the whole time. And the people on the other end of the phone were coaching her about questions not to answer. To your point, they don't have to tell us why.
Sorry. Can you refresh my memory about the requirements banks have when the transactions are over? Is it $10,000 that they have
Yes.
to do some reporting? How does that?
Correct. So there's a little thing called the Bank Secrecy Act. And part of that requires, and this all came out of 9/11, because as you may recall, under 9/11, the terrorists were using the financial system for laundering money to pay for the costs of what they were doing. So anytime there is a transaction over $5,000, or if it is believed to be a fraudulent transaction or a scam, we are required to file what's called a suspicious activity report. The suspicious activity report goes to a federal agency. It is a highly confidential document that, if you would ask many of my bankers, we never know what happens to it. We never hear back in many, many instances what occurred, if anything. But it is compiled by the federal crime enforcement entity, and some are pursued and some are not pursued. But we are required to file those.
So anything over $5,000 you're required to file, whether it's suspicious. Or
Well, anything over $10,000 by federal regulation. But if we believe it is a suspicious activity, in another way, we can also file. They have that discretion.
it goes into a black box. Yeah.
We've had conversations with that federal agency and we might ask and they'll say, we can't tell you specifics. They'll say it's important, keep filing the SARS. Okay.
Question, I have a comment. I really like this concept. I think that we need to look at consumer protections in so many ways. I'm concerned about the amount of time that we have to vet this for.
Right.
And I would love to spend as much time as we have, right? Like more time, I guess. I'd love to spend more time than we have.
Sure.
To do this right. And so I really appreciate the detail that you went to and all the different areas that this touches. And I think that's going to help us make sure that we don't miss anything.
Yep.
I have a lot of concerns about doing this quickly.
Yep. No problem. I would say that, the fraud's going to continue whether we have this or not, and our banks are going to continue to talk with people. And if you all feel it's more appropriate to take the summer and fall because there are other interested parties. I shared with the chairman discussions that occurred in other states that people came out and said, no, we don't like it. There's some people that don't like this for the simple fact that it's my account, it's my money. I don't want you to do it, period. But you should hear from folks like AARP, Legal Aid, Adult Protective Services, credit unions, investment advisors, who all's handling money out there for consumers. And I have no problem if you want to take more time to do that over the summer and fall. And obviously, you'll hear from Aaron as well to make sure it's done correctly, because we don't want to go into this lightly. It is serious when you're saying to a customer, no, we're going to hold this for however many days.
And you said for how many days, because the way it kind of reads, there's no end duration. It says that the bank can just do the transaction.
No, I think there's a time period in there of 30 days, which may or may not be the right time frame, but there is a 30-day number in there.
Is it?
I don't remember which specific paragraph it's in.
It was delay or refuse to permit the withdrawal or disbursement of funds contained in the account.
Yeah, no, there is a time frame for sure. We don't want it open-ended.
That's
Don't want it open-ended.
Just a matter of testimony. I know of a the third party intermediary is super important. I know of a situation where there was a third party kind of accidentally because they were joint on the account.
Right.
But that gave the teller enough legal power to call them and say, hey, this person's taking a lot of money out. You're joint on the account. Are you okay with this?
Right. Yep.
Thank you very much.
Thank you. Appreciate it.
Aaron? Morning.
Good morning, everyone. Sorry I couldn't be there in person.
So I
Can you hear
think,
me?
yes.
Great.
So is this something that the department could support? I'm not saying the language, just the concept.
Oh, yeah, for sure. I think the concept is something we would very much support. I think Governor Scott has made protecting the most vulnerable one of his key priorities as well. So I think this falls in line with that. So without seeing actual language, I want to couch that, but we would support working on this over the summer and the fall as well to really make sure we got it correct.
Okay, so the department would be willing to engage everyone else and sit down and come up with the right language and bring it back to us in January?
Absolutely. We would definitely be a partner in working for that language.
Okay. Committee, does that make sense to you?
Yes.
Yes.
Just drop something into the bill that just ask the department to go ahead and do this summer study on and engaging the necessary people and come back to us with a plan. Okay, makes a lot of sense.
Good.
Great, Aaron, thank you very much.
Thank you.
You're welcome. Thank you.
Okay, committee, off to the floor, back here at 1. Just want to give you a heads up. So tomorrow at 9:30, the Canadian Council General is coming for a visit to the State House. And also the Quebec delegate to the New England states will be here at the same time. And so I was able to ask them if they would like to come in and have a 30-minute roundtable discussion with us about what's going on, between especially Vermont and Canada.
Yeah.
And especially Vermont and Quebec. So they are willing to do that and come in and chat with us. So they'll do that at 9:30 to 10. So General Counsel Bernadette Jordan and New England Delegate Renee Silvestri will be joining us along with their senior policy and advisor Lisa Carrier. So that'll be a good discussion. Maybe our opportunity to talk with our neighbors to the north. So with that, don't forget, have caucuses